Hi, my name is Dylan. I have been productively trading for about 2 years now. My first approach, just like most people, was discretionary trading approach. So it was looking at price charts, doing the buying and selling, looking at trend lines, support and resistance, whatever. Just it was just what you see online when you go on YouTube. You're gonna see a lot of people basing their trades off of visually looking at price action. So I quickly learned that that wasn't really a practical way to trade, and it didn't really make sense to me how you could determine a strategy's effectiveness just by studying it on a price chart. There's important metrics that you need to know, and you can get those metrics from testing systems. So I got into systematic trading, where I took all those ideas that I was using, I tested them, and I would see if they would work or not. So for my first video, I'm going to do something very simple. It's going to be a candle wick study. Essentially what it is just it's called a bullish and bearish engulfing, and it's just using 2 days of price action to catch a reversal in the market. So we're going to see how effective these entries are for the bullish and bearish engulfing candle wick pattern, and we're going to see if this is something worth trading or if it's something trash.
Closest to something that I would trade live for the bullish and bearish engulfing candle wick pattern. And we're going to take a look at the price chart here. So we have the short position. It's just for shorting, and we take some pretty big profits and then our small losses. And I purposely built the code like this so I can see the efficiency of the entries on the bearish and bullish engulfing candle wick pattern. So we have the price chart. We're going to pull up the P&L. And here's the P&L. P&L doesn't look too bad. I mean, we have a pretty strong equity curve, but then we have a pretty huge drawdown, and then the strategy chart's trading sideways. This is a pretty good sign that, this probably isn't going to work anymore in the future, because strategies don't always last forever. That's important to understand, is that, you're not going to be having one thing that's going to make you money forever. So strategies do have a lifetime, and here we could see that cycle end on the peak of the equity chart. So now we're going to look at the daily chart price action on the wheat, and just to get a better understanding of why was this equity curve trending so well. So we hear that wheat has been in a downtrend for most of the time it's been trading since I tested it. Pretty strong downtrend. So on the shorting side, if you're shorting anyways, you have a pretty good chance of making money if you were shorting during this period on wheat. And then we have it start to go trade sideways, and that's when the equity curve starts to fall apart a little bit, and then we have it go up, and then the equity curve gets damaged even more here. We have a pretty strong downtrend. The equity curve did recover. The equity curve on the P&L looks very similar to what this looks like, but just on the inverse. And now we're going to go into the easy language code. You feel free, you guys can copy and paste this into your own account if you would like, so you could test it for yourself. But so I have the input right here. We have LO and SO, fast MA, slow MA, the stop multi, and the slope length. So what the LO and SO is going to do is that LO, if you have it 1, it's going to only initiate long positions, and if the SO is 1, then it's only going to initiate short positions. This is just for me, so I can run my research through my program, and I can test long only and short only, so I can see both sides individually. And since this is a reversal pattern, I had to use linear regression to calculate the slope. So I had to include the slope. For a bullish signal, we need the market to be going downwards. And then for a bearish signal, we need the market to be going upwards. So since this is a reversal, I mean, it can't be a reversal strategy unless it's getting in on peaks or valleys. Well, it's trying to get in on peaks or valleys. And then here's the module for the candle wicks. So we can get the engulfing pattern, and then the bear engulfing, and then this is the buy. But this is essentially just the buy module for long only, short only. This is what the inputs do. So this is just telling you, okay, well, if you have long on, then it's only going to initiate long positions. If you have both of them off, then it's going to go short and long. Only if they're not in a market position. So if you guys want to go through the code and code it yourself, so you could test this out for yourself, you're more than welcome to. And yeah, so that is it for the easy language, and I will demonstrate more in-depth version of the strategy. To look at the files that are in the WFO, which is just a walk forward optimizer. What's it going to do essentially is it's going to give you a very realistic equity curve, and how it does that is it's going to optimize for an end sample period, and then it's going to trade on data that has yet to see, and it's going to give you a very realistic equity curve that you closest to what you're going to get if you trade it live. So we're going to look at some of the output files for it. And I've only optimized a certain amount, even though I tested a lot more. Just to save computer time, I optimized a certain amount that meet a criteria in the optimization. But what I thought was interesting was platinum. So before I said anything about platinum, all the walk forwards failed on platinum, as you can see here. So it's indicating that it's not a very robust strategy. But we do have a nice equity curve, and when it does start to kind of lose money, it only trades sideways, so you either break even or you just lose a little bit. And that's what I like to see in a strategy. That's very good, and it could also be, maybe if this equity curve continues to go upwards, then maybe I might add this to something to my portfolio to diversify a little bit. And then we're going to look at the strategies that did pass the walk forward. So like I explained before, we looked at the 300 minute, and we saw that it did pretty good making shorts for a little bit, and then towards the end the equity curve failed miserably. And that was because we looked at the daily, and then when we saw in the daily was that wheat has been in a downtrend for most of the period it's been trading when I tested it. So if you were making shorts just randomly, you were most likely going to make money shorting on wheat during that time frame. And the same story with natural gas. Natural gas has some pretty strong swings for the downside. So it wasn't really luck that it was making money. It was just natural gas was in a pretty strong bear market, so it started making money on the bearish engulfing. And we only have 3 that passed the walk forward, and that's not a good indication of a good strategy. Usually I get a lot more, even if it's something that I just randomly throw at the wall. So the candle wick study, to conclude the candle wick study, it's not very good. I wouldn't move forward with it, and I'm really not going to put much more thought into the engulfing or the bearish engulfing candle wick pattern. Please just remember to like and subscribe, and I'll continue to push out more content like that, and thank you.